Before anything else, preparation is the key to success. Alexander Graham Bell, the man credited with inventing the telephone, among many other things. Folks, what we do here every day, 10 to 15 minutes, is that preparation for greatness. What do? We track 4 ETFs that give you a broad spectrum view of the market, both stocks, bonds, and a commodity, gold. Why do we do this? Well, you can apply what we teach you to any stock, to any ETF that is actually chartable. We talk about what's chartable and what's not. Primarily, what's chartable is something that has discernible weekly vertical crossovers. What are those? Well, those are the most important things that we see in the marketplace for being able to identify trends. That is, trend changes. The market goes up, the market goes down. When it's vacillating back and forth and not making any definite movement, not a time to be jumping into the market. But when there are swings in the market, up or down, we have something called inverse funds. In fact, the training today, if you've not taken our training on inverse funds, how to succeed when markets crash, we've got a great training for you. It's in the show notes today. If you're not a subscriber, you won't see that. How do you subscribe? You go to chartingwealth.com for free sign up. You'll get every day all of our special trainings. You'll get our videos that we put out every single day, our daily market reviews, and once a week, our weekly market review. We want you to have all of that. And again, if you are a subscriber, look in there. You'll see the special training on inverse funds. Want you to have all of those things. But we look for and identify trends, and we follow trends. We're not doing day trading. We're not looking to pick up a penny here and a penny there in our practice trades. We're looking to pick up dollars, tens of thousands of them. And again, we're not a stock calling service. We're an education firm. We want you to practice trade with us. So in our virtual trading accounts, we're out to become virtual millionaires. And anybody who thinks they can jump into any of this and start trading real money right away without potentially years of practice is a fool, and you will soon be separated from your money. Just like I tell folks, when you go to Las Vegas, why do you see all those big hotels there? Those big hotels were built by the suckers that thought they could beat a rigged system. Well, I don't think the stock market's rigged. At least I don't believe it's rigged when it comes to following trends. Maybe it is getting more rigged when it comes to day trading, market anomalies, inefficiencies, those types of things. Maybe so. But when it comes to following trends, I see them continuing. And those of you who are with us every day, the reason you're with us every day is because you see it too. You see how invariably these things work. Time in, time out, day in, day out. I want you to be with us and do it too. If you hadn't purchased our book, Charting Your Way to Wealth, that's the best way to start. You'll see a link in the show notes. If you're at YouTube, you're getting our emails, you're listening to the podcast, you'll see a link in the show notes. Buy the book. If you live overseas, email us, cw@chartingwealth.com. We'll send you a PayPal invoice because for some reason Square doesn't clear overseas credit cards. I don't know why. Regardless, email us, we'll send you a link. Now, let's jump into the market. And the first thing I look at when I look at the S&P 500 is we have a red spinning top. Haven't seen one of those for 4 weeks. We saw one back on the week ending the 6th of December. Ooh, it's the same day. Isn't that interesting? So when we look at the 6th of January, we see we have a red spinning top forming. Doesn't mean that's going to stay. It could be a booming up week, and that could turn into a green booming up candle. But right now, first day, that shows us some caution. Now, S&P nonetheless still up 0.38%. Price percent oscillator, again, is about where it was in the prior week. Derivative oscillator losing momentum, but it wasn't an up day. Go to the 2-day chart. Hasn't managed to cross over going down yet. Now, we look at this latest 2-day candle. It is a fully drawn candle representing Friday and Monday. It is a red spinning top. It's right there at the 2-day trend line, just above the weekly, with the bottom wick piercing the weekly trend line. Derivative oscillator's been losing momentum since it peaked back on the 27th of December. And again, it's the first solid red candle, albeit a spinning top, that we have seen going all the way back to the 5th of December. So again, we'll watch, pay attention, see what there is to see there. Remember, the 2-day hasn't crossed over going down yet. It could bound off that red signal line and move up. We don't know what's going to happen. We'll watch, but that is a cautionary note on the 2-day. For any of you who have still stayed in after all of this up movement, you're waiting for that 2-day to cross to pull out. If you are, keep a close eye on what's going on that 2-day chart. Not telling you to do that at all. I would have preferred you to take profits anywhere along the way where you saw fit. Remember our jumping in point for that 2-day recross with the Friday effect that helped us out back in mid-month in December. Jumping in point somewhere around the 216 mark. The high was 324.89. That's beautiful. Or maybe you jumped out at 323.80. That's beautiful. Maybe you jumped out at 321.97. That's beautiful. Maybe you jumped out at 320.98. That's beautiful. Those were all beautiful practice trades. Again, want you to have a reason for doing so, but pay attention. Always keep an eye on those bigger charts. Now, what do we see on the 4-hour? Down in the morning, bit of recovery in the afternoon, still below the red signal line. So the 4-hour still in negative territory when it comes to the price percent oscillator and the derivative oscillator. We're going to leave the S&P 500, go to the Qs, my favorite. I just love the Qs. Up 0.64%. That's the NASDAQ 100. The tech stocks, it's just been my favorite ETF for many, many years. What do we see going on there? We see a green up candle. Look, though, the high, 215.59, is lower than the high at the end of last week. So not reaching a higher high yet. Looks like the candle itself is higher than the prior candle, but the wick is not. Priced right there at the 2-day trend line above the weekly, almost sitting on it. Derivative oscillator is losing some momentum, but that price percent oscillator still looks decent. Go to the 2-day chart. Still heading up on the price percent oscillator, derivative oscillator losing momentum. It peaked back on the 27th. So this latest candle, not a solid red candle. It's again, one of those open box red candles, which is, again, it's sort of a cautionary. Things are slowing, but you do see a big wick on the bottom pushing through the 2-day trend line, still well above the weekly. So we'll continue to watch, see what there is to see. The price percent oscillator is still going up, albeit not much. The derivative oscillator on the 4-hour chart is negative. 4-hour price percent oscillator negative, down in the morning, up in the afternoon. Price is right there, running up and along the 2-day trend line. We'll just continue to watch, see what there is to see on the NASDAQ 100. Up decently for the day, 0.64%. Now we're going to leave stocks, go to bonds. What do we see on TLT? 20-year Treasury bonds. Starting the week off, going up. Now again, we had 4 weeks of down movement. The last week, that first week of the new year, included the new year, we see a green spinning top, indecision tending up, and of course we see it going up on Monday. Price percent oscillator still going down, derivative oscillator still negative, but barely. It's losing momentum since it peaked all the way back on the 25th of October. So again, keep our eye on things. Weekly is still down, even though the candle's trying to draw up just the first day of a weekly candle. Keep that in mind. Look at the 2-day. Trying to cross over, going up, it appears. Now again, you might be saying, hey, what's going on? It was a down day. Well, this candle represents 2 days. TLT down 0.57%, that's why you have that wick on top, but still a big green up candle from the movement on last Friday. And of course, hasn't crossed over yet. Derivative oscillator still negative. Price percent oscillator getting closer and closer to crossing over. Go to the 4-hour chart. What do we see there? It crossed over back in the morning on Thursday the 2nd. And of course, really hammered up on Friday, up in the morning and then down some in the afternoon. So again, waiting for bonds to sort themselves out. Just waiting to see, of course, if bonds start cranking down this week and we see the 2-day chart bounce off the red signal line, then of course what would we be ready to do? Jump into a down move on bonds when that 2-day candle closes. If that happens, if that doesn't happen, we'll just wait. Let bonds sort themselves out. Practice trade them later. Patience. Patience, my friends. Lastly, we go to gold. Boom. Is that not beautiful? I know a lot of you jumped into a practice trade in gold on Friday counting on what? The weekend effect. Did it fail you? It did not. It is gorgeous. And what did we see happen? Way up for the day. At one point, it was up like 1.35%. Ended the day up 1.05%. What's it going to do tomorrow? I don't know. I don't have a crystal ball. Nobody does. Could it crash tomorrow? Yeah, it could. But what is the trend showing us? That there's a lot of strength in gold going up. Derivative oscillator heading up. Price percent oscillator crossing over, going up. And for those of you who didn't jump in on Friday, it was early, but it sure looked enticing. You may very well have a chance. Now again, gold could crash throughout the course of the week and might pull back through the red signal line. We've seen it happen before. This is only the first day of a 5-day candle. We'll wait, see what there is to see. You might have a chance to jump into gold at the end of this week on Friday afternoon in a practice trade around, I don't know, 350, 355, something like that. Let's go to the 2-day chart. Again, beautiful, strong up candle. Now remember, gold crossed over going up back on the 11th. And but for 1-2-day period, the 16th and 17th of December, you've seen green candles throughout. This one is the biggest. Lots of surging in gold going up. Quite beautiful. And again, strong up movement in gold. What's the 4-hour chart showing us? Showing a strong up movement in the morning, bit of a slowdown in the afternoon. Derivative oscillator heading up. Price percent oscillator lost a little bit of momentum in the afternoon, but still going up nicely. Folks, that's where we are as we end the day. If you want to know more about what we do, lots of great information. The best way to get it is, of course, subscribe at chartingwealth.com. You'll get our special trainings each and every day. There's also information always in the show notes at the YouTube channel, the email, chartingwealth.com. We post everything every day. You'll see links to our daily market worksheets, weekly market worksheets. You'll see training at our YouTube channel and the website on the daily market worksheets, weekly market worksheets, how to utilize them, and of course the very important trade worksheet for all of your practice trades. We love to hear from you. We're here for you. We appreciate you being with us. We do this for you each and every day. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.